What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 10th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we have what may be one of the most volatile trading days in the year of 2022 for Bitcoin's price. After consolidating sideways for exactly a month now, and generally trading in between this channel from 28,000 to 32,000, we are leading up towards a catalyst report from the U.S. Bureau of Labor Statistics around inflation data. It is what everyone is watching at the moment. And depending on how these numbers come out, we could see a major breakout to the upside if the inflation data is low enough, or if we are overtly above the average estimate for inflation data for the past month in May, we could see a severe breakdown in cryptocurrencies breaking below the channel. We're going to be spending some time to talk about how you can prepare for these moves. If you guys enjoyed the video, consider dropping a like, and let's go ahead and kick things off here. Now, I first want to go ahead and put things into context as to why, more likely than not, we are overwhelmingly likely to see a big breakout towards either one of these directions here over the next 24 hours. Over the past month here, we have been in a consolidated sideways channel. And I know a lot of people are probably thinking, well, wouldn't we probably just continue? Is this a non-event? The big reason why we are more likely to see a major move to the upside or downside from this point on and have a big volatile day for Bitcoin is due to the fact of the market dynamics that are in play. For the past month here, outside, of course, of the capitulation candle here on May 12th, there have been nearly a month of trading days where people have been setting up short and long positions on leverage. People have been, again, borrowing at these levels to either continue their obligations towards the downside, betting on the market, shorting the market, or vice versa, taking this dip opportunity and betting for the upside. People have been placing their bets, essentially. And as per usual, when we're in these consolidation ranges, whether they be it during overbought periods or oversold periods, no matter what you want to label it as, we see immeasurable moves when it finally comes time after given weeks or months that we finally have a substantial move to the upside or downside that completely carries the trend in that direction. Because the reason is that as we have more and more time during this range, the more we push sideways here, the likely chance that there is more open interest or more margin positions in this channel on both directions, to where if we get a collapse in either direction, either a breakout here to the upside where price really gets above this range, or if we get one where we break below here, you are going to have an immeasurable amount of shorts getting squeezed if we trigger to the upside and get above this channel, or vice versa. If we break below here, you're going to have a lot of long liquidations, causing another cascade of liquidations, serving as a domino effect for volume to the downside and dragging price lower, likely down to 25K, and the worst case scenario being 20K. Now, this is not just true in the case of crypto markets. We're seeing this in equities, as we'll take a look at here in just a moment. But I just want to go ahead and provide some context here around the inflation data. The recent high that we had in annualized year-over-year inflation was back here in March of 2022 at 8.5. And since then, in the month of April, we saw a decline to 8.3. Just a 0.2% decline here, showing that all the while the trend has not grown month over month, we are still holding relatively high here. What I think a lot of people are curious about here is whether or not we're going to get another continued month of downside, or we're going to revert back to the common trend that we had held throughout the past year, essentially climbing from 5.3 to 8.5, and therefore in the month of May continuing higher. Now, again, it's important to note that this is the inflation data for the previous month. There are some relative estimates we can utilize in order to gauge what that might be, but essentially speaking, most people are calling for around a similar range here, around this 8 to 8.5 range. If we get something below that, if we start to get something that charters back into 7% and starts to really showcase a deviation of the trend, the Fed, by rising interest rates, is starting to cool down the cost of consumer goods as well as assets like buying a new home, that is going to be a huge telltale sign what the Fed is doing is working. And on top of that as well, not only that the data that's going to be released later here today on the 10th is showcasing positive signs, but that we could see relief in equity markets, as this might mean that the Federal Reserve may not have to touch what really is scaring and spooking markets. It doesn't have to do with interest rates, it has to do with the reduction of the balance sheet. Okay? Now, the big thing here I want to keep in mind is that, and this is something that's so critical here, the Federal Reserve is really only rising interest rates and reducing its balance sheet because its hand has been forced, essentially. The last thing the Federal Reserve can stand and allow to persist is inflation. Because if inflation gets too extended, it will lose control on the system. People will lose trust in the base currency and bonds and the entire financial system. And I think this is a reason why all the while the past few days we've pulled back a bit, why we've seen a significant rebound in the Dow Jones, as well as the S&P 500, and even the NASDAQ into a very critical price range here. The reason why we've seen this rebound here is because I think some of the market is starting to realize that our expectations for inflation, expecting that it's going to get to the heightened degree that people feared back in the 70s, that has been weighing on the minds of a lot of investors. And if we go into a decade-long period of kind of stagnation in asset markets due to this uncertainty around inflation and the increased cost of living, that's what I think people are worried about here. And we wrote about this actually within this month's Dash report here, talking a little bit about how the Federal Reserve plays a bit of a game of tango. It tries to go off of basically having easing monetary policy, a bit of tightening to keep things in check, but never going too hard. But if we can learn anything from the past here, it's that all the while we might be repeating the 1970s, we see here that inflation moves in cycles. It moves in waves over a decade of uncertainty and inflation. This chart here is a couple months outdated. This was posted back in February of 2022 when we were trending around, I think, the 6 to 7.5% inflation range. We're now charting up towards 8% here. And from the last month have seen a lower one from the previous month. If that data continues, we're likely ending the first wave of inflation here, which will mean that the Federal Reserve is probably not going to hike interest rates as much as it claimed, or better yet, it's not going to be tapping into its balance sheet because it doesn't really need to. The Federal Reserve, less than anything, desires to reduce its balance sheet, to increase interest rates. It's only going to do it if it feels it needs to. And I can tell you all, I understand a lot of people are like, Nick, but the macro environment, but the Fed is saying they're going to do this, and they've been doing interest rate hikes for the past few months, and they've even started to reduce the balance sheet. Well, the Federal Reserve has done this. They did it back in 2018, where they say they're going to do something for a multitude of years to a decade, and what do you know, like 95 to 98% of their projections, they revert course and it deviates from the trend they promised. The Federal Reserve owes no explanation to anyone. They dictate monetary policy. And if they feel in this game of playing tango of moderating inflation, keeping trust in the system, but also propping up asset markets, if they feel that they can get away with not having to reduce the balance sheet and not have to hike interest rates as much as possible, then they're going to do it. And that's why this inflation data is so critical now. Inflation usually doesn't matter much in the grand scheme of things until it becomes an issue. It becomes a huge centerpiece focus of monetary policy decision when the currency is losing trust, when there's a heightened degree of cost within the system, whether it be due to supply chain issues, the excessive money printing in the system, whatever the dynamics may be, and I assume that there are multiple that play into it. The Federal Reserve is only going to react harshly when they need to. And outside of that, once trust is regained in the system, yet again, easing monetary policy or practically doing nothing, keeping awash all this cash in the system and not reducing the balance sheet. That's really what markets are spooked about. So if you guys are interested You guys can check the Dash report where I kind of talk about what the Fed is going to do there. And also as well, the really big macro picture that really explains what the Fed is going through right now and how to kind of essentially invest and trade accordingly. Now, I want to go ahead here and take a look at ETH here, because all the while for Bitcoin here, we have a very clear channel here. ETH is really holding on a shoestring here, essentially. It has been continuing to retest this range at 1700 at least 2 times here, actually almost coming in for a third retest here. And all the while, sell side volume has been declining. We've nowhere gotten near the capitulation candle here. We aren't seeing higher highs and higher lows here. We're seeing lower highs and a consistent support range here. And that's generally a descending triangle, which could be seen as a bearish pattern. Now, again, we had the same scenario here on a much wider price range here, back here in May to July of 2021. And the reason why this is a critical support range is not only because of those retests there, but this was generally a contestment range before the secondary price wave here for Ethereum here back between March to May of 2021. If we break below this range here for Ethereum, and I gotta be honest, the chart doesn't look all that great. If we break below this range, you're easily going for 1420 here. And who knows, maybe that's where we go, and that could be the end of the correction. That could be similarly to Bitcoin retesting the 20K or to 25K range. Perhaps that's what we see. But to be honest, again, we gotta wait for this inflation data. If on the other hand here, you've got really great inflation data coming out and you would clear through this kind of general short-term resistance range and be able to make that support, you've got a hefty trend reversal up to 2400 right there. Easy peasy. But again, we don't want to jump to conclusions here. We want to hold out here and wait for an actual trend setup. Now, one thing that I understand a lot of you guys are probably wondering about is the altcoin space. One of the key things I'd say here that I would look for if I'm going to hold on to any altcoin positions is I want them at this point to be able to hold up against Ethereum here or start to actually make higher levels against Ethereum to make sure that I'm at least hedging in this case. I'd like to see them holding up against Bitcoin. And one of those plays here today is definitely Kava. Now, Kava is a play that we've talked about here on the channel for a long period of time, and they're today's sponsor for the video, but they've got a lot of really interesting fundamental developments going on that have held them up here within this market against Ethereum. The numbers just simply don't lie here. And in today's video, I want to spend a little bit of time to talk about what Kava is aiming to do, as well as explain some of the major developments that are coming with the release of its network. Now, to put it simple, Kava is aiming to do something quite big. They're aiming to combine 2 of the most popular developer frameworks, the Ethereum virtual machine, which is utilized for Ethereum, as well as networks like Avalanche and Binance Smart Chain, while also combining the Cosmos SDK as well as its Tendermint consensus in order to build a highly scalable network that is compatible with 2 of the most popular developer frameworks and therefore the applications that we know and love. And this is really exciting because it not only allows for a whole range of developers to build within the Kava network, probably the widest language framework available out there on the market, but on top of that as well, it can serve as a vortex of liquidity to come into Kava's DeFi ecosystem. And that's really exciting here, especially considering the launch of the $750 million Kava Rise developer incentive program that just went live with the launch. This means that over $750 million of Kava tokens are put up for developers within the Kava ecosystem. So if you're looking to build applications in a new hot layer 1 blockchain protocol, you can definitely check out that program and learn more on their Medium. But outside of this, well, there's been some really solid traction right out of the gate here. Over 4,000 Kava wrapped per day onto the network. And on top of that as well, over 57 new wallet addresses here. Outside of that as well, within the Ethereum code chain, there's been a lot of awesome development here, bridging in a whole range of common tokens from Ethereum, from Tether, USDC, Bitcoin, as well as DAI. So we're getting a whole range of different tokens and liquidity, which you can track out here and even try yourself within the bridge for Kava network. And if you're interested to give the network a spin and already hold Kava, you can actually wrap your Kava tokens onto the EVM here and start utilizing the Kava network. If you guys are interested to give it a spin, definitely recommend trying it out. I'm very excited to see what the team has been doing here. This has been a long time coming for them. So I'm interested to hear what you guys think down below in the comments. If you guys have tested it out yourself or checked into any of the data, it's going to be a very exciting experiment for sure to see how this comes out onto the market. Now, finally speaking here, the last thing I want to talk about around altcoins, because I understand it is on the minds of a lot of people here around this topic discussion of inflation and whether or not the market is going to pick up here in the coming days. We've had a pretty dramatic sell period here, right? We're taking a look at the 3-day chart here. So really, over the last 27 days here, really the last month, we've seen one of the sharper declines here, over 25% in a very short period of time. But it is important to bear in mind here that during this period of time, all the while it's been a pretty dramatic sell-off here and the pain has been felt. We are entering in towards traditional discount territory here for Ethereum against Bitcoin. So I wouldn't get too fearful at this range. I think we need to wait and see what this inflation data is going to do. And it'll be out in a couple of hours, so we're going to have to see how it plays out. But again, let's wait for that trend confirmation. Let's wait and see. If you guys are holding positions right now, you can have your stop set if you want, but be careful not to set them too tight. You might get stop hunted. And outside of that as well, it's maybe not the time to go dramatically long until we get some kind of confirmation above the channel. Sometimes it's best to sit on your hands and do nothing when it comes to financial markets. Sometimes those who don't do anything end up beating those who try to trade every single move in the market. We're going to wait and see, and we'll continue to cover it here on the channel either tomorrow or later on early next week. But that being said, everyone, thank you all so much for watching, and until the next video, I'll see you all in the next one. Take care, everyone.